Sorry, guys. I had to jump on a quick. They were asking me questions. Anyways, I'm short ES from 4185 and also at from 4189. Two separate accounts, but yeah. Um, I hope you guys saw or was watching the FTSE, watching the dollar, um, to kind of pick up on that trade. So for me, I'm looking at downside target to take off maybe one, probably either here or maybe 68.50. This needs to retrace a little bit, but I'm probably just gonna see where it goes. I've already mitigated risk, so I'm not taking any kind of heat on this. So just gonna keep watching it. And if you have questions, just let me know.
Thanks, Zero.
Yeah. If you guys have questions about like the FTSE or the dollar index, which is essentially capital flow, that's more of a matchup than it is capital flow, but just let me know. I'll explain it. I actually might take it off now.
Alright, see ya, man. Good trading. Luck with the short.
Later. I'll be right back. Peter, if you guys can figure out how to have it linked, then I'll do it. Otherwise, I'm not actively looking. Yeah, I mean, why don't you try it, and then if it works, then I'll do it. I don't want to sound like a dick, but I'm not going to spend that much time trying to figure that out. It's like it's something that I don't use because I have TradingView and everything's on there. Um, and I have both of them up, so it's not something that I actively need. No offense. Gonna add to a short here. I usually don't trade during this time, but uh, I'm in the money. I don't mind adding to this. Another point to mitigate risk. Otherwise, I'm going to cut this. All right, Imperator, if you're there, let me know. I'll run through the gold trade and then I'm probably gonna shut down the stream. All right, so let's just take a quick look at this. Let me shut off some things. Shut that off. So for me, I'm looking at like the quarterly, right? So clearly we're at a pretty high point right here. Then I'm going to the monthly, looking at the same thing. We're also coming up, high into this area. Again, this is, you can see that it doesn't have to come up here to be support resistance, but for the past 3 months, we've just been bullish, bullish, bullish. We need a pullback. That's one. And then two, if you look at over on the weekly, this is the initial breakdown right here. And we basically retested that area, right? So in my eyes, I'm thinking, cool, this should be a rejection. It's a good area to possibly for it to reject and go lower. And again, we've been bullish for the last, God knows how long. You don't really need to look at the daily since, to be honest, it's very close to the weekly. So if I go to an hourly, I'm looking at this massive consolidation right here. This massive consolidation for this big up move. And I'm waiting for it to just, break that box. And once it breaks that box, I'm looking for a pullback. And that's exactly what I got. And then I'll jump down to say a 2-minute on that box. Right here. I'll zoom in for you. And these are all like major levels of mine. That's, basically set right there. So essentially what I did was, as soon as it broke that box right here, I'm looking for a pullback into the box and a rejection, right? So it broke it right here. And then from about, I didn't get a great price at it, but I got it at a right position. I got 67.04. I brought it to the swing high right there for a quote unquote tighter stop loss. And then I'm looking at higher time frames. So let me just widen this. All right, and I'll show you the capital flow side of things in a bit. After that, whoa, there's my box. Oh, there it is. Okay, so that's my entry box. From there, all these blue lines are, major levels of mine. I was watching capital flow and it was telling me that I can easily bring it down to say, I think my last cover is at 1901 or something like that. So that's, easily a 10th, risk reward, right? So on the capital flow side, what you're doing is you're looking, because in order to buy an asset or sell an asset, what's going to happen is that they need to liquidate their currency and purchase it. So with Gold Swiss, right here, it was, oops, not there. Oh, on the daily. It looks pretty toppy for me. So for me, I was like, okay, this is a possible area to short. I'm also looking at gold. Oh, sorry, that's gold silver. Gold Swiss is right here. This is the day I shorted. We came up here, we're rounding again, a lot of consolidation. Once it showed its strength, I'm looking for a pullback. I'm looking at the capital flow. So they're essentially, selling gold buying Swiss at that time. So I'm okay. I took that short. You look at it in Chinese yuan, same thing. Exactly. The euro as well. I was just going to jump into that. But it's also at this time, look at that double top. It's really close to that. So I decided that it was a good short. Took a stab, leaned against the long. It's very, if you just know where you're wrong. If you're wrong there, if you're wrong above that high, you get out. But with it, even with a 5-to-1 reward to risk, you're still, you don't need to hit a high percentage, right? I've showed this before, and I'll show it again. 1 second, let me find it. Right here, right? So let's just say your account is, I don't know, 50,000. Your typical risk is like, let's just say a modest 1%. That's I typically do 2%, but that's because I know what I can or cannot do. And let's just say your risk reward is, I don't know, a modest 3. Unless you think it's more, you can say it's more. But let's just say it's 3. And your win-loss ratio is 40%. This is just a random generator. For over 100 trades, you'll be up 206%. Let's just say your risk reward is even worse than that. Well, 20 is a little bit low. Let's say it's like 30%. You're still up because your risk reward is good. So for that specific trade, let's just say, I don't know. I think I average about 4 to 5. So let's just say 4.5. I don't know if that'll register. And my win percentage is about 40. I mean, if you're just risking 2% off of, 1 of 4.5, with a 40% win rate, you're making bank, right? You begin with 50,000, you end with something good. Anyways, the initiative down in post gold came with ECB news, right? I got it before the news. I'm most of the time an advocate that news is an accelerator of fundamental of technical analysis, or what the market wants to do already, and it has nothing to do with anything else, right? Because at the end of the day, the Fed, all these government entities, bodies, they're all slow. They're slow to move things. And I'm not saying that they're dumb, they're just slow. So to me, it's it has nothing to do with it. Can it whipsaw you around? Yeah. But most people who trade are afraid of whipsaw. I don't mind taking I don't mind having things coming against me. Like, I don't cringe when something goes against me, say, you know, 2, 3, 4, 5 points. I've taken certain trades before where, it's such a high conviction rate, but where I was wrong was maybe like 8 points away. I'll still take it. Most people wouldn't, because they don't look at it at a higher time frame. I knew, despite having it 8 points away or even 10 points away, I was still going to get easily, 50 points out of it. So I'm okay with that. If the trade idea works, and I know the percentage of it winning in those scenarios, I'll take it. I'll take it over and over again. You like people who say that they won't take it, it's either they're not confident in that setup or they're a fucking fool, right? If someone told you, hey, flip this coin, each time it's heads, I'll give you $5. But when it's tails, you give me $1, I'm like, cool, can we play forever? That's what I'll ask them. So if this setup works and you can hit it 40% of the time, you can take it all day.
Hey, Zero, what's your normal risk?
I would say anywhere between, depending on the setup, but 2 to 5%.
I mean, like stop wise. You run like 4 ticks or 8 ticks?
No, that's too tight, dude.
Okay.
For me, it's about 2 to 3 points.
Okay.
But I'll take multiple stabs. So I don't think you guys were there, but essentially I was long since last Friday and held into my major level at 41.87. I told whoever was here last Friday, I said I was long, holding over the weekend, and I was going to hold it until the major level, and that's exactly where it went. Right. The point is, in and around that, I'll take maybe 2 to 3 steps. So that's effectively like 6 points of stop, right? Possibly, right?
Okay.
So that's the way I calculate things. Is like I'm allowed to take 2 to 3 stabs. Each stab, let's just say, is 2 points. So that's 4 to 6 points. And my risk to reward has to be 3x at the bare minimum of that 6 points.
Okay.
Because if you're gonna take multiple stabs, and let's just say like you have a 3 to 1 or 2 to 1, but if each stab is costing you, say like 5 points, and uh 5 points, and then 3 stabs is 15 points. But your one trade idea that finally works on the third try gets you only 15 points, then you're really only up 5. So you really have to think like of a totality, like, okay, I'm allowing myself how much drawdown per time, and how many tries do I get at this level? And you just, it has to be 3x of that, is what I'm saying.
You need realistic targets too.
Well, you need to see it time and time again. And if you see it time and time again, and that's the thing about capital flow that I love, is that they'll tell me when the trend is changing, right? You'll see it on a much higher time frame. So let's just say we're for the most part, we're short biased. Let's just say, for instance, right? I know we're currently not, but let's just say we're short biased. Even if the market, pull, like there's a chance that it's gonna pull upwards, right?
Mhm.
Why would I take that long? Because ultimately, what happens is, you know, I mean, we all know this. A market moves in this fashion, right? I mean,
Mhm.
if you take away all the noise. So each time you take a short, you're really just making, if you're fucking godly, you're just making from here to here, here to here, right? And the truth is, no one's that godly. You're actually just gonna make from there to here,
Mhm.
right? From here to here. That's just the truth of it. Anyone tells you otherwise is, to me, full of shit, or I don't know.
Or
I just don't. Yeah, I just don't believe someone can pick tops and bottoms, right? We all know no one can do that. So, I much rather buy here when it pulls back, and then when it goes, I'll just add, and when it keeps going, I'll add. I might take some off like here, like let's just say I'm in for like 10. I might take off like 3 here, and when it gets back to here, I might add another 10. So yes, my price is effectively higher, but that's fine. And I treat this like a new trade. And I might take out like, at this point I'll be plus 17. I might take off another, 5. So I'll be effectively plus, 12, and I'll add another, right? So then I'll be 22. And then right here I might take off like, I don't know, 8, right? So
Mhm.
then yeah, or 7, or whatever it may be. But let's just say it's 8, it's like 14. And then let's just say your goal is up here. Well, once it reaches there, you just liquidate. Even then, I won't liquidate all of it. I might liquidate like half of it, if not like 75%. So let's just say I liquidate like 10 of them right here.
Mhm.
And I carry on 4 based on price action, based on order flow, or not order flow, capital flow, and see where it goes. Because again, no one can predict the market. What if the market actually decides to just run and then come back down, or run, or whatever? I'm no
Mhm.
longer super bullish here, but I'm more than happy to take however many points this is. And on a smaller time scale, if it reverses, then I'll just take some off here. And even if it doesn't do that, and as a matter of fact, it pops it comes back against me, and I see that, okay, we're shifting, I'll sell the remaining 4 off here. Yes, I could have made more when it got up to here, but more times than not, you're gonna make actually more.
Yeah, if
So
the
like,
runner works.
yeah, so like the gold trade, I mean, I could have taken all of it off, but the fact is, because I left a runner, I made a lot more. That one runner, or actually 2 runners, made me more money than the whole entire, initial, um, initial, you know, uh, contract investment.
Hmm.
All of it combined. So, you know, that's one thing that people should need to you know, keep a think about. Like that one runner will just make you everything. If it wasn't for the runner, I would make half of what I make, or maybe not half, maybe like I don't know, yeah, 3/5 maybe of what I made.
Okay, makes sense.
That's something, Peter, that I was discussing with numbers. I think as of now, I'll just continue to mitigate risk because even though my break even isn't high, it's only about 13% of the time, meaning it hits my mitigation, my risk mitigation, and comes back and stops me out. Um, I'll just keep on doing that for now. So, yeah, I mean, for the time being, that's what I'm going to do. Imperi, did that make sense, by the way? Oh, man. So, here, I'll show you this. Like, if you don't let runners run, how many people would see this shit? And I'll replay this, right? If you're short, where I was short at right here, and your wrist is right there, or somewhere around there, and it comes down to here, how many people would be like, how many people would be like, oh fuck, I'm gonna take my money and run, right? I think a lot of people would be like, I'm gonna take my money and run. And once it gets down to here, it's like already at 4.9 or whatever risk reward. How many people are gonna be like, oh, I'm gonna fucking take my money and just get out? Because it's, you already made your money, right? Um, but the thing is, what happens is that if you just click onto the next one, it goes boom. And then from there, how many people will be like, oh shit, I just made 7-1. I'm gonna get out. Like, I mean, I think most of you guys will, you know, and then boom again. And you're like, oh shit, now it's way overextended. For sure, I need to take my money and run. You guys get what I'm saying? It's like you guys see this.
Where
Like,
would I take mine? Zero.
oh, yeah. Let me scrunch this up real quick. No, but like you guys get what I'm saying, right? Like you see this big ass red bar, or even on like the 30-minute, you see a fat red bar. You're like, holy shit. Tell me you guys won't take this and run. This is on a 30-minute candle. You guys would be taking it.
Yeah,
But
you think it's going to revert.
yeah, or at the very least pull back a little bit, right?
Mhm.
Test certain levels. Now, I'm not against that. Like if you want to take some off and then re-add or something like that, if you're good enough to, by all means, do it. But the capital flow says don't do it yet. So I did it. And then how many people would see that consolidation and say, I'm going to take it off now? Right? They're like, oh shit, now we're consolidating. Next bar. Oh shit, now we're really consolidating. Now it's going up and down. Okay, we're consolidating. I should just take it off now. But the truth is, you fast forward, it keeps going down. Right? This is still Thursday, right? It's consolidation. And then again, most people would take it off there. I mean, actually, I'll be surprised if people can even hold down to here. And then you see this. up move, and you're like, oh shit. And it keeps going. And then boom, today. So to me, it's like, you have to hold on to as much as you can. And even so, even though I took most of it off at, I think here, here, I forget. Look at how much more I missed because I didn't hold all the way. Right? So I think it was like here. But anyways, yeah. So I can check actually. I take it off. Took it off at 1902. So 1902, right there, right here. But look at how much I missed. I could have just kept it on. But I mean, hindsight's 2020, right, guys?
Yeah. Was that a level
And
that you had from your higher time frame?
I did. The entry was a high level.
I mean,
These
the
are
exit.
my exit was what was it? It was a weekly level, I believe. It was a weekly level. It wasn't a higher time frame level.
Okay.
1902. Oh no, it was a major level. Yep, it was a major level. But yeah, so the thing about levels is you just gotta watch the price action. I think I took it off a little bit mature, but it's okay because I mean, I realistically I should have taken it off just a couple points lower, like not too crazy. I would say this would 96.9 would be it. So 4 more points or something like that, which I mean could be a lot. So effectively, that was like a 24 RR trade. So, but that doesn't happen often. I'm gonna be honest with you guys. Another one I missed today was Euro. I wanted to short up here. I actually got short, and then I was like, shit, the news is gonna come out. It's gonna whipsaw me around. I should just get out. But which is fine. I just got distracted with ES and didn't get back in. As a matter of fact, I flagged it as a short. Had I gone in, I mean, I easily would have taken it down to here. Easily, right? So this is a 13 risk reward trade as well. This would have been a great deal of money. How much? I don't even figure that out. I hate doing this because it makes me cry. Because you start, doing the what ifs and shit like that. But that's the big contract. Oops. I'm curious though. I didn't do this too. That's the menu though. Anyways, let's just see. Entry was at 5 about, and then exit was at 1.08. 690. Let's just say 4 contracts. Yeah, it's a $4,000 trade. So, but this is a high conviction one, so I wouldn't have entered with 4. I would have entered with something a little bit slightly better. But yeah, that was one. What?
800.
No. Even
Divide
with my
by
even
100.
divide by 100, no, eight's a little with the thing about with currency. So I do switch it, and it's a bad habit. I'll switch it because for currencies, there's a lot of slippage.
Mm,
So even though I set my stop loss here, if this shit runs, so for instance, if you put your stop loss like assuming you went long, you just put your stop loss here, your stop could be like effectively right there. So it could be double.
right.
So it's I don't go too big just because it's quite scary. I might go I did enter. I mean, when I initially entered and I got out, I entered with 4. Um, but usually it's about 6 lots. So I don't, $6,700 for it. So to me, I mean, it's fucking fantastic. I also flagged shorts for uh um fuck, what is this? For Canadian dollar, which I also missed. Um, but it's okay. Short on the Swiss as well. So all these red flags are just shorts that I'm looking for. This one would have been decent as well. I'm not going to calculate it because I wasn't actively looking at it, but I don't know, something like this. I probably would have taken off here in all honesty. Rarely would I take it down here, but here would be 7 risk reward. And this just comes with capital flow, being able to see like 2 short things, right? I didn't think that Yum was going to drop that much, but it did. Um, yeah, so I thought ES was going to drop, it didn't. I'm fairly still short biased in this until it shows me a different price action. The capital flow is saying that it's going to be a back and forth trade, like I said this morning. And for the most part, if you look at a 30-minute, kind of was a back and forth trade, right? Until we know what's going to happen in about 2 hours. But I'm short, uh, short bit biased on NQ as well on the Nikkei. Actually, I'm not sure biased on Nikkei anymore. Wait, am I? No, I'm not. So I'm flagged out. Crude. I mean, I've been long biased, but incorrectly. And I took a couple of hits on it yesterday. I took a couple of hits on it, which is perfectly fine. So I'm just waiting for, I flagged this right here at 68.50, and that's where I'm gonna buy the shit out of it at 68.50. I need to double check, but I might just have a resting order there already. Yeah. Half the time, I know that you guys don't really care about like the gold and copper and wheat and stuff like that, but in case someone does, I'll run by it as to what I'm seeing. Um, it's more so, Peter, the way I do it is I'll look. I mean, every day I'm thumbing through capital flow, right? Not every day, maybe every other day for the most part. Um, and once I notice a capital flow I like, what I'll then do is then look for a major level, um, and then watch the price action in and around that level, right? To get short. So when I got long in ES, uh, I think it was 01, was it? Let's see. Um, I forget why I got long. Let me see. Oh, we do have a major level at 39.23. 39.21 and 39.33. So once it got there, I just bought it and just waited and waited and waited until it got there. And then I added here as well at 40.16 because it was a good pullback. Capital Flow was saying that we're moving upwards. So I just took some profit, added here, and then I only did one ad on this one. I didn't do like multiple ads or anything. I don't really care about economic news. I pay attention. I don't care. I don't think it moves markets too much. in a sense of if we're in an uptrend or we need to seal liquidity somewhere, we need to get to this point. So here, I'll put it this way. If let's just say, you know, we, you know, we need to achieve this target right here, right? We need to achieve this target right here. Right. So we need to achieve this target right here. With news, instead of it being this move, it can easily go here, 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 back down, and then finally achieve it right there. Right. Like, that's something that I can see happening with news. Maybe not even that wild. It could just be like that. Or it could be, depending on the news, it could even wick down right here. Right. I know it's not proportionate, but the point is, it might just wick you a little bit more. So it might, instead of having orderly pullback to here, it might drop down to here and then fluctuate. So it might shoot up, take some liquidity, actually, let me just bring that there. So it's relative to this chart on this side. So let's just say news is going to break out, or news is going to be set right here, right? Which is effectively right here. I can see what it does is that it'll come up here, wake some people out. Any weak hands, meaning if people are going to buy breakouts, they'll wick that, take their stops, come back down here. Whoever had weak hands down here, they'll take that as well, right here, and then climb up. And more times than not, oh shit. More times than not, what it'll actually do is instead of even having that pullback, it might just do this. Right. But yeah, so the mean news just is that if you can recognize the flow early and you actually get in at these spots, you're not going to get hurt by this, because news is not, what they're not going to do is they're not going to go all the way down here. If this was a turning point right here, they're not going to come down here. Rarely would they do that, right? And if they do, you just have to get back in. But rarely would they do that, because this level is too respected. And I might be biased on this, but I believe my levels are to be respected. So I don't think that, if you're long here and this is a major level, let's just say, and it runs this far, and I don't mean 20, 30 points, I mean 100 points or something, right? Or whatever it is. I don't think it's going to wick down here to take this out. Micro and macroeconomics, they're all part of it. It's all the same thing. Macroeconomics goes hand in hand with capital flow because, again, a country needs to sell their currency to buy more. And how do you see that? So, for instance, an example is, if you look at just the Chinese, yuan, right here. It's going up against it's going up against the US dollar, which is fine because the US dollar is dropping. That's one thing. That's one thing out of like a lot of other things. So let's just say, let's say against the yen. So we know that the Chinese dollar is dropping against the yen. So let's just say I don't know, randomly. We don't want to use anything small here. The Australian dollar, right? For the most part, it is ranging, but it's on the bottom range. Cool. So let's look at something else. So let's see. Big currency, Canadian dollar, right? It's rising against that. So you just pair a lot of these things up, and you sometimes they'll all match up to say like the low end of a curve, or maybe bottom ticking a big level, then you can take it to the upside. If you have a level in and around that area, you can take it to the upside. But then to answer your question, you need to sell one currency to buy another currency. You need to sell one currency to buy whatever it is that you're looking to buy, including ES. So, you want to pair it with the currencies, and you want to pair it, macroeconomics as well, which is gold or even like the bonds, right? If the bonds are selling off, we're for the most part, not always, risk on in ES. Or if the dollar index is selling off, means they're selling the dollar, they're getting rid of dollar because the dollar is a reserve currency. They're getting rid of that to get into on risk assets. So that's what you got to look at. It's about equal, and I have a lot of. I'm fortunate enough to be part of another group where, um, I have a lot of macroeconomics guys in there, where they've been ex-pit traders, ex-funds, current funds, where we discuss macroeconomics a lot. Current it's not like you can't just buy a book. I think Posino just bought a book on macroeconomics because he's trying to learn and think that you can apply it to trading, and that's just not the case. It just doesn't work that way. You can't apply macroeconomics to it. Not in the college sense, right? Like you're not gonna look at, I don't know. I forget what my college professor said, but none of that shit applies. None of it. The now macroeconomics is more so understanding. So for instance, like semiconductors, what do they require? What do they need? Which countries have it? Those are the macroeconomics I'm talking about. Um, and it's ever changing too, right? Because technology changes so fast. So if I remember like certain coursework I did in uni, which is a long time ago, it was all trash. Things move so fast that that's not needed. Like one course is not going to teach you anything, or 5 courses. Do you mean supply demand in the macroeconomic sense, or do you mean it in like a chart sense?
ES about to make a move here.
Where are we moving to, John? You think down
Alaska.
or up?
I think this for 180, if it breaks, it's good to go down. I hope so.
Are you sure? I think this is a good short.
I was, right now. Let's see.
I think let me see this. I think we have time. I think this could pull back, so don't just take a short here.
We got 8 more minutes to this 30-minute bar close.
I mean, for the most part, I'm gonna wait for another hour or so before I really take another position. Have you been training well, better, John? You have, right? Seems like you're on top of your game.
I'm all right. I think 2 points is not enough.
I know we joke about that. I know you don't just take 2 points.
Oh, I do, but I understand it's a joke. I know it's something that I'm working on. So
Just mitigate risk and let it run to your target, man.
yeah, I tell myself all that every day. Like I know my risk. I know my area that I want. I'm just gonna do it. But damn, it's easier said than done. I think I just need to do that once or twice, and I'll be good. Maybe. I don't
It's
think
just some
never be good.
muscle. This could be it. Okay, all right. Fuck, it just dropped. I'm not taking it. I'm just letting you know. So I used to send screenshots of my actual P&L, not like my small account P&Ls, but my bigger account P&L to FatCat every day. This is like over a year ago. And like at least like a year and a half or 2 years ago. Every day I'll send it to him. And each time, and then when I start, because I'm trading drastically different from FatCat, because I trade many different products. I remember like there's so many times where every single one of them, like maybe like 4 to 5 trades, will be all green, and just rub it in FatCat's face. And at that time, he wasn't doing what he was doing today, right? At the time, he was making 800, maybe 1,000 max or so, and whatever. I think 1,000, maybe 1,500 was his max. I don't know, but yeah. I remember him looking at certain trades and what the fuck, you're trading wheat now? The fuck, you're trading lean hogs and lumber and shit like that? I'm like, yep, trading everything. Peter, no. It capital flow is just one puzzle to your trading, right? So like if I were to mentor someone brand spanking new, which I currently am, maybe not brand spanking new, but as new as possible.
Amazon and Apple is finally coming down.
Nice. They're still top heavy. I've been saying they're top heavy. Tesla as well, John. Tesla's trying to come back down today.
Well, this keeps on testing.
Right.
VWAP,
Microsoft
Amazon.
actually, Meta actually just put in that reversal. So I would say, and the pattern looks really shitty to the upside. Like meaning, this pattern looks very bearish. Peter, to go back to it, I would just tell someone just focus on price action. Just understand price action. First and foremost, because I could give you all my levels, which you have my levels, and can completely not do well, right? I've had that before. No matter how good or bad the levels are, you'll not do well because you don't know if you should buy or sell. Capital flow just tells you where most of the money is going, which direction, and ultimately how long you can hold it for. So if capital flow is saying you're selling, you're not going to buy. And if you were able to sell, you're going to hold until capital flow tells you it's done. Or close to being done, right? And then you exit. So capital flow is just an indication. So if if capital flow was an indicator, it would just be green or red to buy or sell, and that's it. But you still need to know price action. You still need to know, if you want order flows or whatever. I know someone who does EMA crossovers, but he uses capital flow to get in or to enter markets, and he uses my levels or our levels, and he fucking kills it. As a matter of fact, I think he kills it more than most people, more than me for sure. He just uses EMA crossovers, but he only uses EMA crossovers on like a 1 minute or 2 minute or whatever the hell it is, because he sucks at price action. So he uses that as an indication whether he wants to get short or not, or long, and then he might enter multiple times. But his risk to reward, because he reads capital flow well, is oftentimes ridiculous. I've seen him take trades for, I think it was like something ridiculous, like 80 to 1 or some shit like that. So to me, Peter, I know, like when I first learned, price action, all these like dojis and morning stars and wedges and morning wood, wherever the fuck it is, it's just to me it's all dumb. Like it holds. Can you trade those well? Yes, because your risk is good, not because the pattern is good, right? All those things are just about risk, and if your risk is good, then it doesn't really matter what. Meta just put in a good reversal and a good back and fill. So there should be an additional downside to this. Good call, John. It actually went to my target finally. Motherfucker. This can go as low as 62 is what I'm looking at, about 62, before it stops and has a decent pullback. John, if you're short. But anyways, Peter, I'm talking about like swing high, swing lows, those type of things. I think those are better. But if you want to just do like channels and stuff like that, that's fine too. I think that they're perfectly fine. If you want to do dojis and stuff like that, I think dojis are one candle pattern, and a doji is just more so it's a stall, doesn't mean anything. So stuff like that. So I would tell someone to learn that, and then using that, or even order flow is another price action thing, and then go and trade it based on levels, and don't worry about anything else for the time being. And then once they can complete that, then you start looking at capital flow. So that's the progression, whoever's in here that I'm helping. There goes 62. I'm expecting a bounce here, or a pullback, I should say, not a reversal, but a bounce. So there goes that good bounce. What's the low of that? 61.75. So I'm expecting this to pull back, at least up to 70s, but it doesn't have to. Hey man, you sound sarcastic as hell. I'm not sure if I don't think I answered any of your questions, or you asked any. So 62 for me, it's an intraday level. That's why I thought it was going to bounce there. It could still not bounce there. But at the very least, it's consolidating. So, say you're looking to, yeah, it's good bounce. So far, good one. So it's off by 1 tick. Sorry, guys. Lately, I've been off by a tick a lot. Like today, the entry at the long, I was off by a tick. Usually it runs my prices. It doesn't like whoever's in the levels room, I usually try to get levels where it'll run by it by a couple ticks, maybe like 3, 4 ticks, you know, ensure it runs by it so that you can get filled. Because, some people in here slang a lot of size. So, I want to ensure that you guys get filled on those. Ever since I let Peter into the levels chat, he's been very active as far as wanting to learn. John, are you short?
I got into QQ puts instead because
Oh, okay.
those seem to be easier to hold because when I have a stop, I get stopped out so fast because I think my stop might be too damn tight.
Let's just stop.
2 points.
That's not tight.
That's okay.
You're entering based on order flow, right? Or like how Fat Cat does it, right?
Yeah. I enter in areas where I think that
They could reject.
yeah, that, and I'm actually looking at top ticks and bottom ticks and structure and all that. LVAs.
I mean, your analysis is good. Thanks, Dana.
Thank you.
It's good in a sense where you actually take time to do it. I don't think a lot of people fucking do that shit. I think too little people do that. People are lazy.
I really want this to work.
Well, everybody does, man. I'm gonna take a stab here. For shits and giggles, I'm getting bored. I'm gonna mitigate risk right here, actually. Long at 62, mitigate risk at 63.75. Stopped at 60.50. Oh, that's a lot of selling. Oh shit. I should really just get up. Yeah, I'm out. Honestly, like because Peter asked a lot of questions is why I divulge a lot. If you don't ask questions, I'm not gonna just sit here and ramble on and give away the secret. And even if you guys do ask a lot of questions, there are questions I won't answer. So like if you ask me, how do you get your levels? I'm like, I'm not telling you. Unfortunately, no. But if you ask me, like, what do these levels represent? I can tell you that much, but I'm not going to tell you how I get the levels. I've just seen way too many people. Like Peter, I know you asked that before, but um, um, I'm not going to say not because it is a guarded secret, but at the same time, it's like I've seen people come and go, and I'm not going to teach someone for them just to leave me eventually, type of deal. So, um, yeah, I'm not going to do it. I hope you guys understand. If you guys don't, I'm sorry. I have zero gains from doing this anyways. I don't even have a YouTube channel like Fat Cat where he's making some money off of it. He's selling a course. I have zero, equity in helping others aside from just me trying to, you know, stop someone from losing money. That guy has told me to open up a YouTube channel so he can like do shout outs and so I can build my, so he can help me build a brand or a channel. I'm not interested in that. I'm not trying to make money off of, as of now, I'm not trying to make money off of YouTube or anything. Yeah, Peter, for sure. All right, if you guys don't have any questions, I'm gonna take a break. I'll be back in about an hour or so for the afternoon session. But as of now, I'm not gonna trade too much.
Thanks, Zero.
Yep. If no questions, I'm gonna close up. I'll see you guys in an hour. If you guys have any questions, as always, just at me and I'll jump on. Later, guys.